Alrighty, what is going on, everybody? Welcome back to another CYPRX video breakdown. In today's video, we're going to be discussing and talking about, again, the infrastructure that is being built behind the scenes. And today was an absolute perfect example of how, for a fact, that infrastructure is not quite yet ready to handle large amounts of institutional volume and liquidity. As you all most likely know, what did we see happen today? We saw a massive server disruption via Coinbase as the exchange temporarily shut down, showed balances of zero to customers across the board as Bitcoin surged to $64,000. Now, this is a prime example of what we've talked about in previous video breakdowns, that yes, the infrastructure, the foundational layer to handle large amounts of institutional volume and liquidity is being built, but it is not entirely complete yet. And we need to understand that as manual retail investors, that these flash crashes can happen. Again, in previous video breakdowns, this is why we've capitalized on letting you all know that we have capital reserves on the side just in case we see opportune moments like this where we see significant pullbacks in the digital asset space. Now, before we jump into the slew of video clips that I have for you guys today, make sure that you stick around for the entirety of this video breakdown. It's going to be absolutely phenomenal, confirming things like Ripple's involvement in this entire infrastructure layer that's being built behind the scenes. We're going to be listening to some ex-Ripple representatives and some current Ripple representatives confirm some things for you guys that we have been talking about in previous video breakdowns. But before we get into that, I want to make sort of a prediction. I wasn't going to incorporate this prediction into the video breakdown, but now that we're here and we've seen the Coinbase debacle, I might as well throw it in there. I just find it interesting. And again, we have to understand manipulation at its finest. We have to understand who's in control of these markets. I just think it's so hilarious that Coinbase just so happened to experience a server disruption at a premium price on Bitcoin, right? Had no issues any day prior than that. For example, a rally from back on January 26th that started at roughly around $40,000 and now has ended at $64,000. No disruption in between those numbers, but now all of a sudden, the day before, a leap day, and the day before inflationary readings from the United States, i.e. the core PCE price index year over year and month over month, the key inflationary measure for the Federal Reserve is set to come out tomorrow. I think it's interesting how a flash crash happens at a premium price right before the inflationary metrics come out for the US data front. Okay, again, I just personally don't believe in coincidences. Take that how you want it. With that being said, keeping in mind that tomorrow, I've mentioned this on X, I've mentioned this in previous video breakdowns. In my personal opinion, the Coinbase debacle that took place today, coupled with higher inflationary readings that could potentially come out tomorrow, dollar strength, i.e. dollar back above 104.200, heading back towards 105, couple that with potential upbeat labor market data, that means lower unemployment claims tomorrow, could be a catalyst that creates a pullback scenario in the digital asset space and risk assets across the board. Now, we have been talking about this. Hopefully you guys have prepared your portfolios for this and any capital reserves that you may have on the side. This is not financial advice. This is just us properly gauging fundamentals. Remember, I am an intraday trader. That means I trade leveraged and I have a dollar cost average portfolio. With that being said, these are things, fundamentals that we pay attention to. If we get the opposite, which I hope we do, I hope just like you, we are in a full-blown bull market cycle and these healthy pullbacks that we see don't lead to massive crashes and we continue to the upside. So tomorrow, ideal scenario for risk assets to continue flourishing would be lower inflationary readings both year over year and month over month, given the core PCE price index that's set to come out. Couple that with dollar weakness and downbeat labor market data, i.e. higher unemployment claims, signaling weakness and cracks in the labor market. That would be the ideal scenario, obviously, of course, and this whole entire Coinbase debacle being fixed for gains to be met tomorrow in risk assets. If we get the inverse, obviously, of course, not financial advice, adjust your portfolio accordingly, in my personal opinion. If we see higher inflationary readings tomorrow, bringing back the hawks from the Federal Reserve, most likely on the table, because of higher inflation readings, upbeat labor market data, and dollar strength, that's most likely going to be a catalyst that creates some type, to what extent, I'm not here to debate that, pullback scenario in the digital asset space. And we've covered that previous video breakdowns and on the X space pretty much for the past 2 weeks. Okay, so just be cognizant, be aware of that information set to come out tomorrow during New York session. With that being said, let's head over into the video clips for you guys. We have some ex-Ripple representatives. I don't want to butcher his name, Cigar S. I'm just going to leave it there and not butcher his last name. He worked at Ripple for 3 years and 7 months, if I'm not mistaken, roughly from around 2017 to 2020, and now is a top executive at Fireblocks, right? And listen to what he goes into talking about infrastructure, right? Remember, Brad Garlinghouse at Davos this year confirmed that their focus is on infrastructure. I just find it interesting how Ripple, in some way, shape, or form, always has their hand in the back end system, regardless if it's representatives that used to work at Ripple that now work at other large organizations that are doing and building the same exact thing, i.e. this infrastructure layer. We're going to be listening to Jeremy Allaire confirm that the infrastructure is being worked on. It is being built right now as we speak. Ripple's involvement in the whole entire infrastructure layer, how they are building the plumbing, the new plumbing to the financial system, okay? Then we're going to listen to the gentleman again from Ripple, the ex-Ripple representative, confirm things like the automated market maker and how their interest is in that, talking about liquidity, David Schwartz mentioning that liquidity is the secret sauce, some other Ripple representatives going in to talk about how we are in the early days, things of that nature. So just sit back, relax. Again, if you enjoy these video compilations confirming things that the mainstream media is never going to show you all, do us a favor, smash that thumbs up button and subscribe to the platform. We do appreciate the love and the support. Sit back, relax, and enjoy this video compilation.
Say, the recognition is no longer niche. The liquidity is still niche. And, there's a couple of outlined reasons for that: regulatory, accountability, user protection in general, usability. Some of these like DeFi protocol, they're quite clunky. And some of these blockchain networks are also fragmented, right? Like there's a lot of interoperability being built, and I believe, there will be more interoperability possible through the open sourceness, programmability of these protocols as opposed to TradFi. And so that's definitely, we're at the very early innings, so to speak. So I would say like we're seeing growth. If you look at the stablecoin as a financial instrument, for example, 3 years ago, the total market cap was around 5 billion. Now it's like 150 billion. And people tend to overestimate these kind of dynamics, maybe, in the short term, but then underestimate it in the long term, which is...
No, it's very interesting. But to be brutally honest with you, this is a very new space. I know there have been white papers written around decentralized IDs or on-chain IDs or self-sovereign identities. It's still early days. My view is that banks would have taken a position of wait and watch. There are many startups, many blockchain companies potentially like yourself looking at this space around digital identity. We have our own R&D team, and we are looking at this topic very closely. In fact, in the next 6 months or 9 months, we are going to launch some services around this. We already have a product team working on it. But to be honest, in the context of financial services, this is fairly new. There are banks in Europe who are experimenting with this in early days, but there are many barriers to adoption, if I can use that word. So I think still early days, but very exciting.
So we're primarily discussing use cases of Web3 in banking and finance. And before we start, why don't you tell us a little bit about what you're doing at Fireblocks and a little bit about the work that Fireblocks is showing in the region as well.
Thank you, and it's good to see you. We've known each other for a while, but we only met remotely, so it's good to see you face to face. My name is Sagar. I'm based in Singapore, and I lead global business solutions and advisory at Fireblocks. Fireblocks, for people who are not aware, we are a digital asset infrastructure provider. We provide a bunch of services with custody at the core, and on top of it, peripheral services like tokenization, payments, Web3, NFT, tech stack, and so on. I've been spending a lot of time in this part of the world. I was previously with Ripple. Fireblocks, for people who are not aware, we are a digital asset infrastructure provider.
But look, Ripple at its core is a blockchain infrastructure company serving enterprises. We started with payments and financial institutions. We've moved into custody, a lot of overlap with those same financial institutions. But we're going to expand with that same thematic of infrastructure, enterprise-based, that served us well.
And so the key thing that's happening right now is there are huge improvements being made in what I'll just broadly call blockchain infrastructure. You need scalability, so you need infrastructure that can readily support both from a user experience perspective and a raw throughput perspective.
Internet between counterparties. And so if we can, improve it with more scalable blockchain technologies like, Brad's company provides.
You need scalability, so you need infrastructure that can readily support, both from a user experience perspective and a raw throughput perspective, the kinds of things where you can do internet scale things. That's happening right now.
Look, Ripple at its core is a blockchain infrastructure company serving enterprises.
We provide a bunch of services with custody at the core, and on top of it, peripheral services like tokenization, payments, Web3, NFT, tech stack, and so on. I've been spending a lot of time in this part of the world. I was previously with Ripple in the early days of Ripple, and obviously this region was very exciting for us back then, and it remains to be very exciting for Fireblocks.
The first people we reached out to was Fireblocks, right, from an infrastructure perspective. So how do you see the level of sort of involvement and seriousness from the banks in this region right now to look at Web3 and try to build on blockchain in a decentralized world?
It is super exciting for us. We start from banks, so literally, without naming names, we are talking to virtually every bank in the region. Without naming names, we are talking to virtually every bank in the region.
The physical world interacting with the digital world. We need a lot of infrastructure. So the opportunity here is fucking massive. Excuse my language, but it's really, really, really large.
More importantly for me, I think if this space has to evolve, the biggest missing piece right now is around liquidity.
We built the XRP ledger, we designed it, and other people have extended it with the payments use case in mind. And that payment use case is a cross-currency payment world. It's a world where some people like dollars, some people like euros, some people like Bitcoin, some people like XRP. It's a multi-token world. It's a tokenized world where maybe other types of assets are tokenized. And liquidity is sort of the secret sauce to making that work.
More importantly for me, I think if this space has to evolve, the biggest missing piece right now is around liquidity.
And liquidity is sort of the secret sauce to making that work.
I remember when I was in a bank about 7 years ago, my last project with that bank was we actually issue a tokenized corporate bond way back in 2016. So tokenization is not a new concept. The European bank I was part of was the first bank to do this project. And there were many other projects running back then, but they never saw the day of the light because there were many missing pieces. There were no scaling solutions. There was no liquidity. More importantly, the exchanges or the FMIs were missing in action. That is now changing this time around.
And so the key thing that's happening right now is there are huge improvements being made in what I'll just broadly call blockchain infrastructure.
We are seeing many layer 2 or scaling solutions, infrastructure providers like Fireblocks, helping banks and other institutions, making it easier to do it. To scaling solutions, infrastructure providers like Fireblocks, helping banks and other institutions, making it easier to do it.
We've moved into custody, a lot of overlap with those same financial institutions, but we're going to expand with that same thematic of infrastructure, enterprise-based, it served us well.
Helping banks and other institutions, making it easier to do it. But most importantly, we are seeing the large FMIs, exchanges, CCPs, custodians coming in and taking part in this ecosystem. And that makes banks very comfortable with doing this at scale.
For people with your skill set to help us large organizations, there's, build your own companies as well, of course, but you can really help us to get the infrastructure in place to enable, blockchain-based technologies to really grow at the scale that we haven't seen before,
And that makes banks very comfortable with doing this at scale.
It's what I say to my crypto native friends is that, it's kind of like the empire striking back a little bit. The big organizations are going to use the technology at a scale that we have not seen before for this level of technology.
For me, I'm really excited to see how this tech is going to really massively scale over the next few years into many trillions of volume and scale on a daily basis.
And we do see Web3 and the decentralized world coming into play a very critical role there. I know a lot of the banks are working with the likes of JP Morgan, etc., to build these payment rails on chain.
And I would say, hey, TradFi has recognized it's reached critical mass. It's not going to go away. Crypto is not a fad. And now they're starting to build or co-build the pipes and the plumbing for this to happen in a way where, regulatory compliance is given, where a billion-dollar family office can lean into it and really adopt it.
I mean, I think Swift will always be here. I mean, Swift is just a messaging system. It doesn't transfer anything. But anytime you've got a payment to settle an asset transaction or whatever, you need a Swift. It involves a Swift message. I used to work at the Bank of Canada on the foreign exchange desk. You live and breathe Swift. The only thing I can see on the horizons, you've got, say, Ripple. Ripple has a competing project called RippleNet.
I think perhaps to take on what you've been saying there, Duncan, is what are we talking about here in terms of these new money rail systems? What are we talking about here in terms of these new money rail systems? So firstly, we're talking about different forms of payment rails. So a very big part of blockchain technology is bringing out something like the Ripple network, which wants to be the next generation of a payment network, a cash system.
The other theme within cross-border payments, which I am very excited about, is the use of permission DeFi. So how do you combine stable coins with permission DeFi to create on-demand liquidity, right? So you get rid of the pre-funding concept, you get rid of the CFI exchanges in the middle, and then bring in a permission DeFi pool or AMMs, automated market makers, to do interbank wholesale FX between two banks.
Yeah. The other thing that I wanted to talk about is automated market making. As I mentioned before, the XRP ledger is the OG DEX. We had a DEX in 2012. We have cross-currency payments. We have issued assets. We built the XRP ledger. We designed it, and other people have extended it with the payments use case in mind. And that payment use case is a cross-currency payment world. It's a world where some people like dollars, some people like euros, some people like Bitcoin, some people like XRP. It's a multi-token world. It's a tokenized world where maybe other types of assets are tokenized. And liquidity is sort of the secret sauce to making that work. I think personally, my earliest vision that I think has held for 10 years now was this idea of sort of public pools of liquidity. In existing payment systems, you're stuck with that payment system's liquidity. If you use Western Union, you get their cash in, you get their cash out, you get their liquidity, whether you like it or not, and you can't unbundle those things.
So I hope that you all enjoyed that video series. Again, just like the gentleman mentioned at the beginning of the video, don't get too ahead of yourselves. Understand and zoom out via the long-term perspective. These intraday price swings, these flash crashes, and this price manipulation that we are set to experience over the next couple of months/years, it is normal in an infancy stage of a new and emerging asset class. Don't get shaken out, zoom out, and see what is happening behind the scenes. You heard these gentlemen confirm today that bank and financial institutions are for a fact interested. They are for a fact adopting this new technology, and they are for a fact building the foundational layer that is needed to handle large amounts of institutional liquidity and volume. With that being said, again, do us a favor, smash that thumbs up button and subscribe to the platform before you head off here, and I will see you all in the next video breakdown.